Hey everyone, my name is Deepak Kumar with Weichert Realtors. I hope everyone out there is staying safe and healthy during this crisis. Obviously, a lot's changed with our economy over this past couple of weeks due to this pandemic. And one of the main things that a lot of people want to do this spring was buy a home. And now they have questions regarding what's going on with the mortgage industry. Are their homes available to see? So, as always, when you start searching for a home, one of the first things that you want to be doing is getting your mortgage pre-approval. So, I thought it'd be a good idea to talk to one of our local experts in our area, Adam Zebib from Weichert Financial, to figure out what's going on here and maybe share some information with you to see if it would help. So, Adam, how you doing today? Thanks for joining.
Thanks for having me on, Deepak. So, yeah, just like you said, I hope everybody's doing well and staying safe during these trying times. I know that the focus here is to educate everybody about the changes in the mortgage industry, and I think that we'll be able to do that and shed some light on the subject.
Good, good. All right, so just a couple of questions. The one question that obviously everyone always asking is what's going on with the rates. And I know before this pandemic had started, rates were basically at a near all-time low, is my understanding. What do you see actually happening with the rates today?
Yeah, that's true. Rates were at a historical low, and they're still at a historical low. Actually, rates have gone down since this has begun on the conventional side. We're seeing today's rate, for example, is at 3.375% on a 30-year fixed mortgage. So rates are at an extremely low level, and this is definitely a good time to buy.
That's good. Yeah, that's good. So Adam, a lot of people are seeing these things on the news about, oh, the Fed cut the prime rate to zero. Does that have any impact on the mortgage rate? I don't think it does, right?
That's correct. Yeah. So the prime rate affects the secondary market. So, for example, if you're looking at taking a home equity line of credit or a second mortgage, that's where you'll see that 0% come into play. So the way that it works is 0% is what the Federal Reserve is charging banks to borrow money from them right now. So as a consumer, if you go to your lender and apply for a line of credit, prime rate is the Fed rate plus 3%. So that's the prime rate to consumers. And then there can be a margin plus or minus depending on the different criteria of the loan. When we look at the primary mortgage market, it's based on mortgage-backed securities. So the reason why rates have stayed low is because the Federal Reserve is committed to purchasing $50 billion a day in mortgage-backed securities. So they're creating demand for the securities. However, those securities are still a bond. That's the way that we determine where the 30-year fixed interest rate is going to be. So if you really want to see where a 30-year fixed interest rate is, you're better off following the 10-year Treasury and mortgage-backed securities to see the fluctuation in the market.
All right. Yeah, that makes sense. I mean, I think the bottom line is if someone does have a question on interest rates, really they should contact their loan officer and see, is what I'm hearing valid, just kind of like what we're talking about today, so that they can get the facts from someone in the industry versus just reading articles online.
Absolutely. That's what we're here for.
Perfect. All right. So Adam, once this pandemic ends, a lot of our financial institutions are calling for a rapid recovery to the GDP. So as you can see in this chart here, a lot of these major institutions like Goldman Sachs, JP Morgan, Morgan Stanley, they're showing what's happening today, and that's a sharp decline going into the second quarter. But what if this coronavirus does go away and the economy rebounds right away? We're going to start seeing a fast recovery going into the third and fourth quarters of this year. And that's what the big guys are calling for. So that's good news if it happens, and we all hope it happens, and that's what they're expecting. But Adam, what do you think is going to happen with the mortgage industry? Like, what do you think is going to happen with the rates in the second half of the year?
So, yes, I agree. This will be over before we know it, and we'll be back to life as normal. No one knows what the future holds. However, once we see a signal that the pandemic is coming to an end, most likely the equity markets will rally. Generally, we will see an increase in interest rates when that happens, since there will be less demand for the bond. As investors liquidate positions that they hold in the bond market to dive back into equity, interest rates will go back up. It's economics 101, supply and demand. As the investors sell out of their positions, the rates will increase to make the bonds more attractive to the investors.
All right, Adam, that makes sense. So on the real estate side, in terms of volume, we definitely saw a decrease in terms of new listings come to the market when this all started. Actually, when the governor first made his announcement that we're going to go into lockdown and have our social distancing guidelines, that week we definitely barely saw any listings come to the market, especially in our area here. But since then, I've started to see a slow increase in more listings coming to the market. I think as people start getting used to this new way of life of buying and selling real estate, we're going to start seeing more listings available. Adam, what do you think is happening on the mortgage side? Did you see a sharp decline in terms of applications or activity and a possible return?
So on the mortgage side, we're seeing a lot of applications come in on the refinance side. Since rates have stayed so low, people are still taking advantage of that and refinancing. So applications are up. On the purchase side, what I recommend is to get your borrowers to get pre-approved as soon as possible. And the reason why is because the guidelines are changing. And Fannie Mae and Freddie Mac are going to be raising their criteria as far as credit and income levels. So for us to stay ahead of the curve and make sure that we have qualified borrowers when the markets return to normal, as they will, it's important to get all your borrowers pre-approved so we can work on any credit issues that they may have and get them prepared to buy when all the inventory starts hitting the market.
Yeah, I think you're right, because actually I've heard that some of these big lenders out there, they're now requiring minimum scores of 700 when previously it was much lower. And actually some of them, I think I've even heard say that you need to put 20% down when previously you can go as low as 3%. Are all lenders doing that, Adam, or is it just some?
Not all lenders. So you're going to see some of the depository lenders tightening their guidelines because their primary business is deposits. So if you bank with some of the larger institutions, they may say that they now require you to have better credit than they would have before and a larger down payment. For example, 20% down is usually the key number, where lenders like Weichert Financial, our core business is lending. And we're here to support the real estate industry, and that's our mission statement. So we are not changing our guidelines. Our guidelines only change with the secondary market. So as long as the secondary market is keeping those 3% down loans in place, we will as well.
That's actually really great to hear, because one of the main concerns a lot of people are having is, oh, I was planning on putting 3 to 5% down. Now I have to put 20% down. I don't have it. So we do know that some lenders are doing it, including yourself in Weichert Financial. So good news there. Good news.
Yes.
One of the other issues that's happening right now with the economy is a lot of people are losing their jobs. Either they're getting laid off or being put on furlough. What happens, Adam, if someone gets put on furlough for a certain amount of time while they're in process to purchase a house? How does a lender treat that?
So if you're working at a job and you were furloughed because of the coronavirus, unfortunately, you have to return to work before you can close on the home. Underwriting is going to verify that you're back to work 48 hours before you close. So if your employer tells you, hey, Deepak, we're going to lay you off, but we're going to rehire you on June 1st, then you should plan on not closing on a home until June 3rd, because we're going to want to make sure that you're back to work before you close on the home.
Okay. Yeah, that makes sense. All right, Adam. So another unfortunate thing to happen right now is with people losing their jobs, but also currently own homes, they may have some struggles making their mortgage payments. I've heard about these mortgage forbearance programs. Can you tell me a little bit how that works and how that may help these individuals?
Sure. The federal government has mandated that all lenders issue a forbearance program for the borrowers. When you put your loan in forbearance, basically what it means is that you don't have to make a payment for 90 days. After the 90 days, depending on the lender, they may require you to make a one-time lump sum payment, or they may work out a payment plan with you. Or in the best case scenario, tack on those 3 months payments to the back end of your mortgage. So for example, if you had 10 years left on your mortgage, now you would have 10 years and 3 months. So the issue is that right now, you can put your mortgage into forbearance with a phone call. You don't have to show any paperwork. You don't have to do anything else. But at the end of the 3 months, if you can't show a true hardship and the reason why you put it into forbearance, then they're going to require you to possibly pay that 3 months in full, or set up some type of payment plan with you. If you can show a true hardship and there's a real reason why you did it, then you may be able to just tag that onto the back end and continue paying your mortgage as you normally would. The good thing is that as long as you're current on your mortgage, then while it's in forbearance, it's still going to report as current, even though you're not making the payments for those 3 months.
Okay, so that's a plus. So as long as you're officially approved for forbearance, and what you're saying is it won't count as a ding on your credit or anything like that.
That's correct. As long as you're current when you go into forbearance. If you're not current and you're already delinquent, then it's going to continue to report as delinquent.
All right. Yeah, that makes sense. Adam, one final question. So I know right now with social distancing, a lot of buyers that used to prefer coming into the office and meeting you and submitting the mortgage application aren't able to do so. So similar with me, I used to meet people for buyer's consultations in the office, but now we're doing everything online through similar chats like this. What are you going to do on the mortgage side? How are people going to get in touch with you and submit their applications for their pre-approval?
So with me, you can always apply through my website, weichertfinancial.com/AZebib, or it's just as simple as a phone call. Everything now can be done online, just like we're doing this. So the pre-approval process takes 15 minutes to do the application and discuss all the finances and costs involved. And you can email me all the required supporting documentation, and we can issue the pre-approval. So it's just as simple as a phone call, an email, or just doing the application online.
Perfect. That sounds easy enough. So good. All right. So I think that had all the questions I had for you today. I think this was helpful. I think this will probably got a lot of good information out to everyone watching. And as always, if anyone has any questions, please do reach out to either Adam or myself, and we'll be happy to help. We'll leave our contact info below. So thank you, everyone. Thank you, Adam, for joining, and I hope everyone stays safe and healthy out there.
Thank you, Deepak.
Thank you. Bye.